Welcome to the Northbound Wealth Podcast. All opinions expressed by Brent, his co-host, or his guests are solely his own opinions and do not reflect the opinions of Northbound Wealth Management LLC. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, or tax advice, or as a solicitation to offer or to buy any securities. Clients of Northbound Wealth Management LLC may maintain positions in the securities discussed in this podcast.
Hello, everyone. This is the Northbound Wealth Podcast with your host, Brent Foster, Weekly Market Insights. This is 4/20, or April 20th, 2026, the year of our Lord. All right. S&P 500 index rose 4.5% this week to a record close as investors grew more optimistic about the situation in the Middle East after Iran said the Strait of Hormuz was open. The S&P 500 ended the week at 7,126.06, its highest closing level ever. Boy, that was quite the rally from the correction we just had. The market benchmark also reached a fresh intraday high on Friday of 7,147.52. The weekly climb, its third in a row, moved the S&P 500 back into positive territory for the year-to-date number. It is now up about 4.1% for 2026 and 9.2% for April alone. President Donald Trump said Iran agreed to suspend its nuclear program indefinitely and won't receive any frozen funds from the U.S., Bloomberg reported. Trump said in a phone interview on Friday that a deal to end the war is most likely complete and talks over a lasting agreement will probably be held this weekend, according to the Bloomberg News report. Earlier Friday, Iran announced the reopening of the Strait of Hormuz for the remainder of the U.S.-Iran ceasefire period. The technology sector had the largest percentage gain this week across the S&P 500's 11 sectors, jumping 8.1%, followed by a 6.6% climb in consumer discretionary and a 6.3% advance in communication services. Real estate and financials were also strong, rising more than 3% each, while industrials and healthcare also edged higher. Oracle shares led the technology sector's advance, soaring 27%. The company said it plans to expand its multi-cloud networking capabilities to provide connectivity between Oracle Cloud Infrastructure and Amazon Web Services. The consumer discretionary sector was boosted by a 15% jump in Tesla shares. The electric vehicle maker is developing a new compact, lower-cost electric SUV that looks to expand its lineup beyond Tesla Model Y and Tesla Model 3, according to a Reuters report citing unnamed sources familiar with the matter. Also, Tesla is planning to launch a 6-seat long wheelbase version of the Model Y in India as early as next week, Bloomberg reported, citing unnamed sources. 4 sectors declined this week, led by a 3.5% drop in energy and a 1.7% slip in utilities. Materials and consumer staples also edged lower. The energy sector's drop came as crude oil futures fell amid Iran's announcement reopening of the Strait of Hormuz. The hardest hit stocks included shares of Conterra Energy, Devon Energy, and APA, which shed 7.5% each. Quarterly earnings are expected this upcoming week from companies including Tesla, GE Aerospace, GE Vernova, United Health Group, Philip Morris International, Business Machines, AT&T, Boeing, Intel, American Express, Union Pacific, and Procter & Gamble. Economic data will include March retail sales and pending home sales, as well as a final reading on April consumer sentiment. Thank you, Y-Charts, for this information. Next, we're going to look at major index returns over the last 1 year trailing. We've got the S&P 500 up 35.13%, NASDAQ's up 48.74%, MSCI EFA index is up 32.84%, and Dow Jones Industrial Average up 24.55%. Respectively, over the last 1 year trailing number, S&P is just really reversed and pivoted. We've got the 10-year Treasury rate at 4.26%, and that's down. That's actually up from 4.20% about a month ago. All right. Next, we've got where Americans moved in 2025. Well, I put an infographic up on the blog and it's really interesting. It's got really good imagery. Net migration loss or gain per 10,000 inhabitants. Let's see. New York's high cost of living led to over 55,000 people leaving the state in 2025. South Carolina has the fastest per capita growth in the country, so it's growing really fast. Texas gained over 68,000 new residents in 2025. That means that's an entire city moving to Texas last year. Let's see, what else do we got that's notable? California is down like 25.1 points based on the way they measure this. Oregon is down 9, Washington's down 10, North Carolina's down 29.2, New York 28.2. You've got population gains mainly in the Midwest, the heartland, away from the coast. So with the exception of Maine. So it looks like Maine has grown by 35.7. So it looks like Maine, but South Carolina, 79.7 is the highest based on these net migration loss or gain per 10,000 inhabitants. You've got the Midwest again, rocking it. Tennessee, Alabama, Wyoming, Maine. Idaho is growing quite a bit. Probably a lot of defections from Oregon, Washington, and California. Okay, and then the next infographic I have on here is how long it takes to save for a home in every state. This map shows how long the average earner in each state would need to save in order to afford a median priced home. Hawaii is the least affordable state, with buyers needing 28 years and 10 months to save for a home. In contrast, it takes about 1 year and 11 months in Wyoming. So if you want to buy a home, you could really probably look at Wyoming. And that source was Andy Lichty and Associates, a good friend of mine down in Indianapolis area. If you ever need a realtor, he's awesome. His team's great. But that data is from realtor.com. Appreciate that infographic. You can check it out there on the blog at www.northboundwealth.com/blog. This week, we've got key economic data, Tuesday retail sales, business inventories, leading economic indicators, pending home sales Wednesday, EIA petroleum report, Atlanta Fed, inflation expectations Thursday, weekly jobs claims, purchasers managers index, the PMI, all the PMI data, and then we've got Friday consumer sentiment. Got a lot of notable companies reporting earnings this week, so we'll be tracking all that for you. Tax tip of the week: are you prepared for natural disaster? Natural disasters such as hurricanes, earthquakes, or wildfires can occur at any time, so preparing before disaster strikes is essential. Here are a few tips to help you prepare in case anything happens. Number 1, update your family's emergency strategy. These can include knowing where to go, where you keep all necessary documents and possessions, and what you need to be prepared for. Check these regularly as circumstances can change, and so can batteries run dead. So make sure you grab those. To create digital copies of important documents. Most financial organizations, such as banks and insurance companies, provide digital copies of bank statements, tax returns, and insurance policies anyway, and keeping all these digital copies saved and organized is excellent practice to get into. If you only have paper copies of important documents, scan them and store them securely for emergency access. Document valuables. So documenting valuables makes it easier to claim insurance and tax benefits after a natural disaster. A disaster loss workbook will help you compile a list of belongings and photographs, and that can make this process even more accessible for both the IRS and your insurance provider. And that means less stress. So these tips may help you have everything you need ready in case of a natural disaster or another emergency. This information is not a substitute for individualized tax advice. Please consult with a qualified tax professional to discuss your specific tax issues. This tip was adapted from IRS.gov.
Whether you're just getting started as an investor or you're managing a multi-million-dollar portfolio, Northbound Wealth Management has the solution for you. It all starts with building the right financial plan. To speak with a financial planner today, visit northboundwealth.com. Don't forget to check us out on youtube.com at Northbound Wealth. And make sure to leave a rating and review on your favorite podcasting app. Thank you for listening.